What's up, traders? It's time to do our weekend homework. Thanks again for joining for weekly levels, where I'm going to look at the levels in all the major stuff that trades to see where we're going to find opportunity in the week ahead. This is going to be for February the 6th, 2022. We're going to start off with cryptocurrency, then we're going to look at the stock futures, and then we're going to look at the commodities, and as well as review a couple of cool things that happened in the past week. This is all designed to help us find key levels, key tradable levels and opportunities where we can look to take trades that are going to have a high probability of success. So let's start with Bitcoin. Bitcoin gave a lot of the bullish people something they've been hoping for a very, very long time. Big greenish bar on February the 4th. This was about an 11 or 12% up day, which is more characteristic of what we saw over the last 2 years. I'm sure a lot of people got excited for it, but the question is, where does this take us? Well, I've maintained since October, November of last year with this failed breakout on the weekly, we failed to break higher, that Bitcoin has entered into a bearish trend. And I define that bearish trend, and I now analyze it using the Ichimoku cloud. I still maintain that this will get bullish if we clear the cloud. And as you see, there's a lot of price and time to make up to get us to that point. But it's very interesting what level we've come to right now. The reason is because we've basically come to this liquidation low. Basically, the December jobs report, the US jobs report, tanked cryptocurrency down to this spike right here. Had a little bit of recovery, and then by the force of gravity, brought us back down to the level. This was right around the last pullback to go long, liquidation low, and here where it stopped before breaking into this recent leg. So we see that we're at a very critical level of resistance. It was support, then it turned into resistance. So where things go from here is going to be really key. So this week, I'm definitely got my eye on Bitcoin. And this is also very close to the 50% retracement of this trend down, which is at about 42,500. The level we're talking about here, around 41,500. So let's call it 42,000 is the key level for Bitcoin this week. Watch it. It either needs to break higher, and then we can continue this rally, or it may hold the resistance to come down and retest these lows. So it's going to be very, very critical to see what happens. If we look at Ethereum, it also had a bit of a rally. It's come back to a level here, but it still has a ways to go before it can recapture its liquidation low. And I think it's very critical for people to look at the crosses between Bitcoin and other currencies, because there's been a lot of talk over the last 2 weeks about if we're going to see alt season. I think it's kind of ironic in a way, because in the history of Bitcoin, alt season tends to happen in relatively bullish cryptocurrency markets. And right now, we're not in such. Ethereum, throughout the bull cycle that we recently went through, outperformed Bitcoin. This is the Ethereum versus Bitcoin cross, ETH BTC. But in this recent downtrend, Ethereum has been underperforming versus Bitcoin. And that's pretty characteristic of when you go into a bearish crypto trend. Traders begin to look at Bitcoin as a safe haven asset. And one way you can visualize this is by looking at the BTC.D, which is the Bitcoin market dominance. This is relative to all the other cryptocurrencies here, calculated by TradingView. And I think one of the key things to look at here that I've been watching for these last few weeks is to see, analyzing using the same method as I do price action, if we actually are breaking out to the upside of this daily cloud. Price is already on the side. That means that Bitcoin's dominance is rising relative to other cryptocurrencies. Now we need to see if it trends in that direction. And that's going to happen in the case of a bullish trend on the dominance, which happens when cryptocurrency as a whole market is trending bearishly. And that's why it's going to be very important for traders to look at these crosses, the ETH, BTC, the XMR, BTC, whatever it is, whatever your personal favorite cryptocurrency is, go and look at the cross against Bitcoin and see what it's doing. This can be a good hedging opportunity. If you do not want to sell your cryptocurrency, hopefully you trade on an exchange where you can look at one of these crosses to set up you some sort of a hedge if you're concerned about the value. So that's what we're going to be looking at this week. Bitcoin is really, really driving the car. So, stock market. This has been a very interesting week. I say that every week, but this is the time to get it in, at least in stocks. This time of year is really, really key for traders to get in these big movements. You don't see these kind of movements in the summer months. There's something about the winter months. I guess everyone's inside trading. Don't know what the explanation is, but things tend to move, at least in the northern hemisphere where it is winter. Interestingly enough, if you look at the Australian currencies, the South African rand and the New Zealand dollar, they actually tend to have big movements during our northern hemisphere summer and their winter. Don't know why it is. Now you see it, watch for it. So I've been looking at the key level on the market to be the 4,500 level on the ES Futures 450 SPY. And that's the 50% retracement level of the move we had down from the beginning of the year. We closed above it last week. Or wait, was this Monday? Yes, actually it was Tuesday of this week. We closed above it. Now, we started to dance around it here the rest of the week, but this was key. This was key for us to break that resistance level. And here's something very interesting about what happened at the same time. If you look at the VIX, which I use to time market often, it can oftentimes give you a hint to this. And actually, I made a video about this earlier in the week. Go check it out. Everything should be on my... I make a lot of videos. It's in here somewhere if you look for the VIX. Okay, moving on. All right. I'll just redo it for you here, live. We'll do it live. I don't actually want to edit my videos because I don't get to edit my trading. I have to do everything live. So all these are done one take. So I like to do the 50% retracements, and it actually works even better on the VIX because the VIX volatility is a mean reverting instrument. And so there's a little bit of discrepancy between where I wanted to say what's the key level for the VIX. And of course, when we had the big move down on January the 24th in the stock market, that brought the VIX up, spiked it up. You'll see this a lot where volatility spikes up, fear, emotion, people rushing to buy options for protection kicks in. That's what drives up the implied volatility of options and why you see it do this. And then we can now figure out what our levels are. So what happened was in the next few days, on the 26th of January, we came down and we held. Now, at this point right here, there was reason to be a little pessimistic because this is a sign that we could go up to make an even higher high on the VIX, which would mean a lower low on the stock market. You can often see it where we had close here at key levels, and it kept rising higher. This is back in the December down move that we had. So we're looking at those key levels there to see where it's going to hold. And we had a few days here where on the 28th of January, which I believe that was, yes, that was a Friday. I'm sure that we talked about this in the weekly levels for that week. We held that level. That is where we would say that the VIX is telling us it could actually continue up, which means the stock market could go down. But Monday of this last week, the VIX actually closed below that key level. This was what it needed to do to give us a sign that this bearish move, this minus 10%, give or take, correction that we expect to see once every 2 years on average, may be ending. I know a lot of people are out there talking about how the stock market is going to crash because the economy is crap. Look, they've been saying that every day of every year that I've been trading professionally for almost a decade. And it happens exactly as the statistics would predict. You get about 3 to 4 minus 5% pullbacks in any given year, which we got in 2021. You get 1 minus 30 to 40% correction per decade, which we got from COVID. And then every other year, you get a minus 10% correction in the stock market, which we just had. I know everyone wants to sell you some fear because that gets clicks. People get thousands more views than I do telling people about how they should be afraid. This is fear. This chart right here shows you people's fear. Fear sells. We are risk averse by nature. And so we're keen to look and really focus in on threats. But it's not true. And it doesn't really help us make money as traders. We have to put that emotion to a side. And we can do that by using charts to normalize this fear and give us something to act upon. This right here was a sign on the VIX when we closed below the level, because from this point forward, now we have a reason to assume that volatility is going to return to lower levels, which means the stock market should slow down in its bearish trend or go up, which is typically what volatility does. So as you see, volatility, fear, emotion tends to spike up and then it falls off as people calm down. Well, the VIX right now tells us that we are calming down. We could still very well come back up. What I'd really like to see is us to come up and hold this level right here, just like we sort of did here back in the 20th of December before we had the Santa Claus rally. We may get a retest. Again, the way I trade is all about levels and looking for price on a daily basis or whatever the time frame is to close above it or below it. This gives you the best idea you can of what's going to happen in the future. Technical analysis is not about predicting the future, but it's about finding opportunity with a good likelihood of happening. Okay, that's enough preaching about the VIX. NASDAQ actually was even clearer this week. And this is what I really like. Check this out. So from here to here, the down move on the NASDAQ came up to the 15,000 level and it held it perfectly. Well, nothing's ever perfect, excuse me. In my mind, this is very clear because you had the dip right here and then right here at the level, it held it. Now, a lot of people would say, oh no, that means we're going down. Well, not yet, because within this rally, you also have another 50% level. So you can measure them out. Price moves in fractal patterns like this. And this day right here on the Thursday, Facebook. If you remember, Facebook earnings scared the entire market. Hundreds of billions of dollars of market cap was wiped out in a single day. It's crazy to see a stock that big acting like a penny stock, but that's what happened. The market was afraid, and they were all waiting for Amazon earnings to come out and save the market. Well, it sort of did. And as you see in the morning months right there, bloop, again, it tested that level, but both Thursday and Friday held the level here. Now, we're talking about this on Discord because I've been live trading every day just to put myself out there for that reason. Maybe help some people see what I do. I try not to be too woo-woo and autistic about the levels and explain it. But what we're looking at happening is possibly us to do a little bit of games playing in here. Because if you remember, if you recall from last week, I mean, that's what the market basically did. It's really, really hard to get long on this rally. The lizard people that are the whales or whatever that control the market, they don't make it easy. They don't make it easy. And so I think that what is very likely to happen is you see some games playing before we do actually potentially break that resistance. So we could see some sideways movement, but the key level here is, of course, getting above that or getting back into this range. This right here would be a little unfortunate, but it wouldn't worry me so much yet. Of course, what does start to get me bearish, I shouldn't say worry me, because all you have to do, we're all traders here, okay? If the market goes down, even if your portfolio is down, even if all those stocks you bought in 2021 are down, look for opportunity. There's a lot of money to be made on the bear side if we do go through this full pullback. So I don't know why you're watching videos that just scare you. You need to watch videos like this, like mine, that tell you about opportunity. There's money to be made in a bearish trend. Go find it. So gold, I know a lot of people like to talk about gold. I don't know why. I just don't see gold doing very much. It's not very interesting to me. We really need to break this range one way or another. Oil, though, has been very, very interesting. It just keeps on going. And I've been talking about this for the better part of the year. I remember when I first started cutting my teeth trading, we always traded somewhere around the $100 range. That seemed to be where oil really liked to hang out. And so it's just a very obvious place for where oil is going. The reward to risk on the way up there is a little bit tenuous because you've got all this that it can retrace. I know I said that last week, and then this week we had another several up days. We had basically another move up here. So now what we want to see is possibly at some point a pullback to 85, but we may not get it. It could just keep on going. So energy was never free. It wasn't free when oil went negative. And I think it's going to 100. I think that's the next obvious level. It's a nice psychological level, but it may take the next couple of weeks. So I think every week that we look at oil, it's just going to keep on creeping higher. But I'm watching for a pullback. I am. You'll get something, hopefully. The dollar. Is the dollar going to zero? Is inflation getting really bad? Well, let's take a look at the DX. So I've been watching this on the weekly time frame because that's where the story really is. Now, this is actually interesting what happened this week. Last week when we looked at this, we were starting to get on the bullish side of the cloud on the weekly. This has been a rally in the dollar. What the DXY is the dollar index relative to other world currencies. Imagine if we look at the euro dollar, which is what comprises most of the traffic. Oh, let's make it a little simpler. Hold on. USD, EUR. Thank you, TradingView. Looks almost exactly the same as the DXY because the DXY is heavily weighted by the euro. So versus Europe, the dollar has actually been going up. So hyperinflation is not really happening, but this is interesting that has happened in the last week. We've now possibly had a false breakout. If you recall, we've been looking at this trend here on the daily with the dollar pull back to the cloud and it tried to pop above it this week, but we had this level that we cleared and now we're back down below it. This is really something to pay attention to. This is one of the key elements of technical analysis. We'll take off Ichimoku, is to look for these sort of false breakouts. And that's what it looks like to me, actually. So we may actually see some bearish movement in the dollar. So if you're a Forex trader, you can go into this week thinking along those terms. So that's about all the time we have before I hit the 20-minute mark on TradingView's limit. I think we covered pretty much everything. Trade wisely this week, guys. Again, get it in. Get it in these last few weeks of really high volatility. This is some good trading. I'll see you guys next week and the videos I do today. Oh, by the way, I'm also going to be doing a collaborative effort here later on this evening with Carrie of Best of Us Investing. So I'll try to stream it here. Thanks, guys. We'll see you next.